Hi, today we're going to look at health insurance and a little bit about disability insurance in order to educate ourselves about the various options that are available to us as consumers when it comes to purchasing an extraordinarily important part of our insurance plan. So what is health insurance? Health insurance is an insurance policy that helps protect you against financial loss caused by an injury or an illness. So anytime you have to go to see a doctor or go to the hospital, if you break an arm or you get the flu or any sort of issue related to your health, health insurance will help pay for some, if not all of those costs, which can be very, very significant depending on how sick you may become. Do you need insurance? Well, the answer is yes, you need insurance. Currently, health insurance is mandatory according to the Affordable Care Act, and so you need to purchase it. Even if it weren't mandatory, you need health insurance because you don't know what kind of health issues you may have down the line until you're diagnosed with it. And by then it's too late to get health insurance. So better to be safe and prepared for a cancer diagnosis or a significant accident by having insurance in advance rather than have those events happen and not be able to get covered. Every health insurance plan today kind of covers all of these various services. Visits to the doctor, emergency services and transportation to the hospital, hospitalization, prescription drugs, wellness services like an annual physical, for example, for children or even for adults are generally covered by your insurance policy. Even pregnancy for everybody is actually covered in your insurance plan. Certain things are not covered, however. Things like vision and dental are separate insurance policies in most cases and are also important for you to purchase. Things like acupuncture or elective surgery like cosmetic surgery are things that are not covered by your typical insurance, nor are long-term issues, things that are sort of a permanent condition that prevents you from being able to take care of yourself. That would fall under long-term care and requires a separate insurance policy. There are lots of places to get insurance. The most common one is through what we call a group plan. Group plans are generally offered through your employer. And so the employer purchases the health plan and offers it to their employees, and employees can choose to take the employer up on that offer. And then it sort of depends on your place of business. Some employers pay all of the costs of health insurance. Some only pay a portion of it. Some will pay for all of their employees, but not for the employees' dependents, like their children or their spouse. So it sort of depends on where you're at. But the same concept applies that when you get a group policy, it tends to be less expensive than when you buy it on your own because you have a large group of people, all of whom are sharing the risk of getting sick. And therefore, any one person won't bankrupt the group. And therefore you don't have to pay as much as if when you're purchasing it on your own. You can buy an individual plan if you're not part of a company that offers health insurance. Typically that's going to be people who are self-employed or in small businesses, and you would go to what's either called the state or federal health insurance exchange in order to purchase your health insurance policy. And typically you have an option between gold, silver, and bronze levels of coverage, and those different levels have different premiums and deductibles, and it just depends on how much you're able to afford as to which of those plans is best for you. As you can see, most of the exchanges are run by the federal government. Some states have their own, and this list of states which are running their own marketplace versus the federal government is constantly changing. So whenever you watch this video, it may be different than what you see on the slide. When you go to get health care from a doctor, typically you will have to pay what's called a copayment. So that's your portion of the medical visit bill, and you have to pay that when you receive treatment. So when you go to the doctor as you're checking out, they'll ask for your copayment, and that could be $5, $15, $20. It just sort of depends on your policy. And you pay that amount, and once you pay that, you leave the doctor's office for the day. The doctor's office will then send the remaining amount that's owed to your insurance company. And if you have no deductible, the insurance company pays it and you're done. If you have a deductible, the insurance company will basically send the bill back to you and you'll pay the remainder of the bill until you've reached your deductible for the year, and then the insurance company will pay for the remainder of the year. So for example, if you show up at the doctor for a checkup and he charges you $150 for the visit and you have a $15 copay, you'll pay $15 and your insurance company will pay $135, assuming you have no deductible. There are a number of options for what type of insurance you have. One is called an HMO, a health maintenance organization. This type of insurance is one in which you have a limited number of doctors that you can visit. You're not allowed to visit doctors that are outside of the network without having to pay for it on your own. So you're sort of limited in the services that you can get through your insurance. And typically you need to get a referral from your primary care doctor in order to see a specialist for whatever problems you may or may not be experiencing. Another option is called the Preferred Provider Organization, or PPO. It tends to have a higher premium than HMOs, but in exchange you get greater flexibility. You can go to whatever doctor you want. You don't need referrals from your primary care physician, and you tend to have lower copays and deductibles. Third option is what we call a Point of Service Organization, or POS. And this is sort of a hybrid between an HMO and a PPO. Like an HMO, you have a primary care physician who can refer you to other doctors, but like a PPO, you can go outside of the network if that's what you choose to do. You just end up paying a little bit more of the cost when you're outside of the network than when you are inside of it. Regardless of which option you choose, you should ask yourself the same set of questions when deciding what's best for you. One is to look at the premium versus the deductible and weigh that decision as to how much risk do you want to take. If you feel pretty healthy and you feel like you're not going to see the doctor very much, then maybe a low premium, high deductible plan is better for you. If you tend to be sick and go to the doctor often, then that yearly deductible, maybe you want to have that be low and pay more with a higher premium. What you can afford is a big question here. So to the extent that you have money in savings, you can get away with a higher deductible than if you have no savings. You'll be interested in knowing what the copay is in order to make sure that you're willing to pay that amount each time you visit. And you should know what kind of limitations there are in your plan. What's going to be covered as far as prescription drugs, for example. Will they cover name brand drugs, or will they only cover generic drugs? These kinds of things are the kinds of questions you want to see and get answers to before making a final decision on which insurance plan is best for you. For those things that occur that are long-term in nature, you'll need long-term care insurance that's separate from your health care plan. Typically, those who are 50 and over should buy long-term care to protect themselves for against the increasing costs of health care as you get older. So if you end up with something like dementia, you're not going to be covered by health insurance with long-term dementia issues. You're going to need a separate health care insurance plan to take care of you in that kind of situation. So if you have sort of a permanent issue with dressing, bathing, eating, walking, anything like that, that's not going to be covered by health insurance, and you'll need a separate policy to cover your costs. Lastly, there is this idea of disability insurance. It's not the same as health insurance, but if in fact you are unable to continue working due to some sort of workplace accident, then a disability insurance plan will help replace some, but not all, of the income that you would have earned in your old job. So there's short-term disability for if you can't work for 3 to 6 months, long-term if you are sort of permanently disabled. And so it's important to make sure that you also have this type of insurance to protect yourself in case of illness or injury in order to help you continue to pay your bills when you're unable to work.